With the short-term chop continuing, uncertainty and doubt is beginning to build in the markets. Will Bitcoin continue toward the downside for the beginning of 2025, or are the buyers going to step back in and push the price upwards? In today's video, we are going through the daily, weekly, and short-term charts in massive amounts of detail. Let's dive on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an absolutely fantastic start to 2025. In today's video, we are taking a look at the short-term aggressive chop for Bitcoin, discussing the daily chart and similarities between the 2023 December period and the March 2024 period. We'll also be discussing the key levels you should be watching, potential reversal points, what a reversal will look like for Bitcoin, and exactly what needs to happen for those buyers to get back in control and push the price upward. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us over in Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, click the pinned comment to join our VIP channel. You can contact me by clicking my name at the underscore MegaWhale, or clicking these two links for more information. The first link being a track record link, the second link being a 10-minute video showing you inside the channel itself. We have over 700 members. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats, our general chat, our trading chart and education chat, our daily video chat, our help, our news, and our community setup chat. Check it out, guys. Go ahead and join up. Again, all information in the pinned comment. We'll see you in there. Let's dive on in. So as we can see, over the past, I would say, week, there's been a whole heap of chop for Bitcoin. Bitcoin has basically been swinging, multiple thousands of dollars on the intraday movements, and overall, we haven't really seen all that much. We're just seeing this slow, gradual decrease in the price action with some aggressive short-term fluctuations. And if we look at this data over here, this liquidation data, you can see already the 24-hour liquidation is sitting at 130 million, with 63 million coming from longs and 67 million coming from shorts. So almost, a split 50-50 in terms of liquidations. So we can see there's a whole bunch of uncertainty in the market right now, and that uncertainty is pretty well expected as we move into Christmas, we move through the new year, and we're moving into that second week of January where businesses start to open up, where people come off holidays and volume really starts to pick up in the market. And the overall vibe we are getting right now from the market is that the market is waiting. It is waiting to see how it reacts moving into that second week of January, where everything starts to open up, volume picks up, and we start to see more aggressive directional moves for hopefully the remainder of Q1 2025. So if we look at the price action here, we're going to go into massive amounts of detail today. We can still see some big similarities between two periods. The price action right now we are seeing in regards to the overall structure, the momentum trend, and the Ichimoku cloud, showing very similar setups to that of which we saw all the way back here in February, March, and April, as well as what we saw back in December 2020. December 2023? It's been a while now. On the daily chart, December 2023 was over here. So we're seeing a bunch of different similarities popping up from two different periods, suggestive that we could see a little bit more of a correction downwards before we then see that expected macro continuation upwards for the rest of the majority of 2025. We'll discuss that in today's video as well. And we'll most importantly go through these similarities and discuss the trigger points that have been visible in the prior scenarios, which we can infer onto this current scenario to exactly understand when the best time will be to have that confirmation the price action is done with this correction and is going to go back upwards. And of course, we're going to be short-term price action as we do all of that, discussing this recent chop and next potential moves. So as we mentioned, liquidations all over the shop, 50-50 split, a representation of the uncertainty and the chop in the market. During these conditions, people generally get overly bullish on a green candle, overly bearish on a red candle, but we need to kind of zoom out when we see noise in the short term. It is best to take a step backwards and look at the bigger picture. Volume down 41%, 114 billion over here. Nothing too unexpected as it was New Year's Eve yesterday for the USA. Moving over to the DXY, not much happening. Again, we are expecting the DXY to slowly and gradually climb upwards, potentially to 110, 111 as we move into the next interest rate decision, where then we will likely create a top before we then go back down if the interest rate decision is, of course, an interest rate reduction. Moving over to the S&P 500, still not looking amazing. As we said in yesterday's video, the S&P 500, or day before's video, the S&P 500 is literally printing a reversal here. This is going to be an assumed local top for now until we break back above it, meaning we are short-term bearish on the S&P 500 until it can prove otherwise. And you're probably thinking, why are you bearish, blah, blah, blah. We are not bearish. We have been bullish on the S&P 500 since all the way back down over here. Every single video for 2 years, we were saying we are looking for 6,000. We are targeting 6,000. I must have said like 100 times, maybe 100, maybe 2,000 times. Every day for 2 years, 6,000 was our target. We have met our target. We've created what we can see over here, a deviation from the prior high followed by a support resistance flip, marking this as a reversal, establishing a local high upon deviation, and this is what we would call the beginning of a short-term reversal, meaning there is a possibility we could see the S&P 500 come back down to 5,700 over the coming weeks, or even within the next week. This is something we are paying very close attention to, particularly as we enter that second week of January. For us to be bullish on the S&P 500 again, we want to see one of two things. Number one, we want to see this local high reclaimed, meaning the price breaks over 6,100. We then expect higher. Number two, we want to see our prior high, which we did have that support resistance flip on, establish and retest and bounce as support. That will be the second scenario. So it's either a retest here or a break here. When one of those two things occur, we will then be expecting bullish continuations for the S&P. Between these 2 points is a zone of uncertainty, okay, and a zone of short-term weakness. Something to pay attention to. Before we get into the crux of the analysis, guys, if you do want to support the content and support yourself even more, sign up to BitGet, BitUnix, or Bingus with the links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% on all of your trading fees. And again, you'll support the content here and support yourself in your trading. Sign up, it takes a few seconds, and we'll jump back into the video. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump on back in. And I want to start today's video on the total cryptocurrency market cap, as the total cryptocurrency market cap is a representation of the entire crypto market, right? It is an indication of, on a general scale, is cryptocurrency bullish or is cryptocurrency bearish? Are we above support? Are we below it? Are we expecting higher? Are we expecting lower? These general broader questions we can ask when we're looking at this chart. So there's two things I want to go over, and we've gone over this before. Number one, the similarities between the 2021 breakout and present. And of course, number two, the critical level of support we need to sustain above for us to remain macro bullish for cryptocurrency. So number one, the 2021 breakout, we saw a explosive rally after we broke through that 2021 high. We saw a rally of around about 45%. After we saw that 45% rally over a 1 to 2 week period, we then saw a 30% correction, which did not result in the price action breaking back below that 2021 high point. You can see the price did not even come back down to test it. In the current scenario, we saw an explosive breakout of that 2021 high of around 24%, and we have since seen around about a 15% correction, coming just shy of retesting that prior 2021 high. So assuming we follow the 2021 cycle, we could see a continuation upwards from here. And I'll actually rephrase that to, we should expect a macro continuation upward for the total, provided we are able to sustain above the 2021 high. The weekly close, we are looking at 2.83 trillion. So provided that 2.83 trillion level is able to hold a support, no matter what happens here, it will be more likely that we'll see macro continuations upwards. So the macro charts for cryptocurrency is bullish. We'll come back and do an altcoin video talking about the altcoin market later in the week. If we move over to the macro charts for Bitcoin on the BLX chart, we can see we are still very much macro bullish, right? We are seeing, although we are seeing some negative momentum shifts occur as marked out by these red arrows, we are still sitting above our major macro indicators, such as a Gaussian channel, such as the leading span A, our vortex trend indicator is still green, it is still positive. So we are still in a macro uptrend. But what are we experiencing? We are experiencing a local top, a short-term pullback. Now, will this pullback develop into a macro downtrend, or is it just going to be a short-term pullback? And that's really the big question that the market has been challenging with for the past few weeks. And that's where all that uncertainty is coming from. So to answer that, we can't give you a straight answer. We have to look at the charts, look at what has happened, and look what is happening to decipher that question. So let's start on the daily chart. Actually, you know what? Let's start on the weekly chart. From a weekly perspective, while Bitcoin remains underneath 98,000 US dollars, the possibility for an extended continuation to our nearest levels of support, the most critical one being 86,000, is possible. So the price range between 86,000 and 98,000 is a possible range of price movement, while the weekly candle remains under 98. At the moment of which the weekly candle closes above 98,000, that would indicate the short-term correction that has been present since the $108,000 top has been exhausted, and we will likely then see a continuation of this uptrend. That is something we're watching out for, number one. If we take a look at the daily chart, we have also got a very important trend line on the RSI. We'll come back to show you similar scenarios historically, how we have seen the price action respond to positive momentum shifts on the daily after we see losses of the leading span A and the 50 EMA. But we'll talk about this first. The downtrend on the RSI is a representation of the momentum of the price action, which is just a measurement of strength, all right? Since we created the bearish divergence, the first high of the bearish divergence back on the 20th of November, since that point, we have seen the price action more or less show, number one, a degree of exhaustion, and number two, after creating that discrepancy, that divergence, we have seen the price action retrace back to the 50 EMA and back to the leading span A of the Ichimoku cloud. So we've seen a downtrend, a short-term reversal downwards initiate. Now with this RSI trend line, that being a representation of the momentum during this cluster of price action, if the RSI is able to break toward the upside, that would suggest that the momentum, the strength has turned positive, And if that occurs prior to these critical levels of support breaking down, it would also suggest that the selling pressure into this level of demand has been absorbed, okay? And essentially what that means is the sellers have run out of selling. They've exhausted their selling, and therefore the buyers are back in control. That hasn't happened yet. But when that occurs, that will probably be, in my opinion, the strongest indication of a continuation higher for Bitcoin. Now, if we look at our prior price action, let's move over to our prior scenario. So we're going to move over to, this is going to be our scenario back in December 2024. We had a very similar setup to this current price action. As you can see, we have, number one, the RSI downtrend represented by the downtrending diagonal trend line. We have number two, we have the bearish divergence from our local top to local top. Number three, we have got the consolidation / loss of the 50 EMA, the red line, and the leading span A. What did we see? We saw a correction toward the leading span B. Following the correction to the leading span B, we saw a rally, and that rally ended up resulting in the RSI breaking out, momentum flipping positive, and the price action continuing the uptrend. That was the first similar scenario. The second similar scenario we saw was over here. Now again, we didn't really have this strong negative momentum, this bearish divergence in this scenario, but we still had a relative downtrend for the RSI. Again, we had the price action show a degree of exhaustion at these highs, okay, failing to break through that higher high right over here, again creating lower highs, followed by a consolidation to the leading span A and 50 EMA, resulting in a correction into the leading span B, and only after we saw that break of the RSI, we saw a continuation upwards. So we can see how this similar pattern has popped out a few times on the Bitcoin chart. That's just in the last year and a half on the daily chart. So these are not assurities, these are not certainties, but they are representations of how the price action has acted prior, and thus could act in the future. So this information is very valuable because it can give us many points that we can work off. Number one, it can give us invalidation points. Number two, it can give us targets. Number three, it can give us confirmation points. And number four, it can give us reversal points, all from this chart. It really gives us everything we need to know. Now, if we then apply on top of that general rules following these indicators, we would know now, while the price action is sitting within the clouds of the Ichimoku cloud, we are in a degree of uncertainty. It's essentially the trend is shifting. It's a shifting of the trend. So it is a degree of uncertainty where chop is expected to occur. So if we're looking at our prior experiences on the charts over here and the current price action, the levels we are watching, I'll go ahead and annotate them for you. Number one, the leading span B. Okay, where does that line up with? The leading span B lines up perfectly, okay, with the 86,000 to 85,000 lower level of support. We'll come back to that in a second. Then number two, we have got the downtrend on the RSI. A break of this level will confirm a macro continuation upwards. If you're looking for the most safest entry, that would most likely be the positive momentum shift. Number three, like we said, reversal points will likely result from retests of that leading span B into that liquidity zone. And number four, invalidations will be if this lower point of support fails to hold. If we drop below here and we continue, that would be indication that this structure has exhausted and we are actually likely going to enter a higher time frame correction. So heaps of valuable information, actionable information we can derive from just this daily chart alone. You know, just this daily chart alone gives us almost everything we need to navigate January, maybe even February of the price action. If we move over to short term, it gets a little bit more choppy because the price action is a little bit more choppy. As we can see, we are still in a downtrend, the general downtrend. We have our high, okay, we have been creating these lower highs as the price action has been continuing, right? And we have not yet broken above a single one of these lower highs. Although we have broken that diagonal trend line we discussed, okay, the chop has essentially invalidated that. We do have this bullish divergence over here, okay, but the angle of that bullish divergence is quite weak. It's not a very strong bullish divergence. It's quite a weak bullish divergence. So at the moment, we are still watching these horizontal levels. For us to see any sort of indication the higher time frame price is turning bullish, again, 98,000 needs to break. That lines up on the weekly chart, this horizontal level of resistance. For us to see short-term strength for continuations, we need to start breaking through these prior local highs. 95,000, okay? 96,900, 98,000. These prior local highs need to break. Until that, the most likely scenario is we have this upward chop followed by a steep correction, this upward chop followed by a steeper correction, etc., like we have seen play out essentially now for nearly 2-3 weeks, okay? So that is what we're watching out for. We're not getting caught up too much in the short-term price action. If the price action does start to go up over here, and we do start to see breaks of these levels, that could indicate we are moving into these next levels of resistance. But even that wouldn't have much bearing on the macro charts. We really need to see that $98,000 break. We need to see the daily momentum turn positive. Or we need to see our lower levels of liquidity touched. Again, those lower levels of liquidity we're watching for are like 90,800, okay? And these lower levels at 88,000, 86,000, etc. So at the moment, chop, uncertainty, indecision, those are all common things floating around the market. It is best to zoom out, take a step backwards and look at the charts from a slightly bigger perspective and have a plan. You need to have a plan for every scenario. Like I say, confirmation is the insurance you pay to be right. It doesn't matter if you miss 5%, if by missing 5%, your probability of success in your next position significantly increases well above 80%, okay? So you have to look at it from an objective position. Now, there are going to be people in the comment sections who are investors. There are going to be people who are traders, and investors and traders have completely different mindsets, right? An investor has something called opportunity cost. They do care about when they are not in positions. They do care about what the asset is doing when they are not in their spot positions, because again, they can't trade both directions. Whereas a trader, they only care about the percentage change of the asset between their entry and their exit. The price of the asset is just a unit of value. It doesn't mean anything, and it doesn't reflect or have any bearing over their profitability. The percentage change from entry to exit is what matters. So you have to first off define what you are before you can start thinking the way you need to think. For me, I'm a trader. I don't really care what Bitcoin does on the macro. Now, if we look at my macro projections, I've been basically correct this entire time I've had this channel because we use macroeconomic models as confluence when we are projecting where we expect the price action to go on the macro, but on the short-term price action, when we see these fluctuations in price, if you're getting emotional over these short-term moves, you need to either take a step backwards or just realize that opportunity is not fleeting. The market is full of opportunity. If you miss one trade, in an hour's time, there might be another. In fact, the one in an hour's time might be a better opportunity than the one you are beating yourself up over missing. In fact, tomorrow's opportunity might be better. We don't know how the market is going to develop entirely, so we can't project when and where these opportunities are going to pop up. So a lot of people get, emotional, oh, the price action's gone up, or if they want to short, the price action's gone down, and I missed that trade. Doesn't matter. There'll be 1,000 more trades in the weeks to come. The market isn't going anywhere. So focus on your decisions now in the present rather than trying to imagine how you would have acted in hindsight or you're going to act in the future, because again, everything is easier when you look at it in hindsight. But I always like to tell everyone when I trade, I'm going on a bit of a rant over here, when you're making decisions, at the time of which you entered the trade, if you are following your rules and principles, it is likely that the decision you made at that particular time was the best decision you could have made at that time based on all the relevant information you have, your past experiences, and your general level of knowledge. So only in the future, when you look back on that decision, can you critique it as a positive or negative. And that is not how you should do it. Because a good trade isn't a winning trade, a bad trade isn't a losing trade. A good trade is a trade where you have a plan, a premeditated plan, which you follow and execute correctly. You do not exceed your risk tolerance, and you execute the trade from a position of, I would say, no emotions. That itself is a good trade, whether it be a win or a loss. Okay, there are plenty of people who make good profits in bad trades. Okay, AP into a trade and it goes up 20%. You're like, whoa, that was awesome. That was a great trade. No, that was actually a trash trade because you had no justification for why you did that. You can't replicate that in the future. You learned nothing. You just made money. Okay, and probability wise, that is much more unlikely to occur again. You need to have a plan. Thanks for tuning in, guys. Have a fantastic day. The leaving notes is, don't get too caught up in this short-term chop. If we look at the short-term price action as evidence of what is going to happen in the future, I mean, we've been chopping now for like 2 weeks, okay? If you're getting overly emotional and every single time we move up 2 or 3% and then down 2 or 3%, you're just going to drive yourself insane. Okay, watch these prior highs, watch for structural breakouts, watch for momentum shifts, watch for evidence that the buyers are back in control. At the moment, it doesn't seem to be the case. Thanks for tuning in. Catch you later. See you then.